Welcome everyone. Welcome back to the Think Capital YouTube channel. We'll just wait for the room to fill up. Welcome guys. Thanks for coming. So, firstly, I'll introduce myself. My name is Rodrigo Antonio, and I'm a performance and psychology coach for traders. And I've have over a decade of trading experience myself. And I've coached hundreds of traders overcome their psychological hurdles like fear, FOMO, revenge trading. These are the most common problems that traders face, but they're just unable to understand how to overcome it themselves. So what I've done is I've developed systems and processes in helping traders achieve consistent results. And my team and I, we've been able to secure over $2 million in funding, which is over $2 million in payouts from funding, which is incredible. And my passion is equipping traders with these tools, these systems, so that consistency is sustainable over time. Yeah, and I get obsessed with helping somebody who has these mental blocks, has limited beliefs, has certain cognitive biases that stops them from mastery. It stops them from mastering themselves. So I want to be able to dive deep with you guys today to understand what it is to actually build an edge. Because once you fix this, you're able to really and truly start sustaining performance. And I've I'm going to be showing you guys several steps that are going to help you in achieving this. So I'm going to go through 6 steps that is going to help you learn how to fix the majority of your trades, at least 80% of your trades. And this is the blueprint that essentially 99% of traders are missing out, right? They don't have these 6 steps in place, and that is why they have so many psychological issues. All right, and you're going to understand what it truly means to have an edge, because there is a lot of information out there about what it truly means to be an edge, but it's not sufficient enough, and it doesn't really absorb. You're not taking it in, because if you're struggling with your trading right now and you've done you've worked hard, but you're still not profitable and you haven't been able to achieve these things, that you might be missing one of these steps. So I want you guys to focus today, take notes, and we're going to be understanding the principles that you need to improve your current strategy, which, like I said, will fix at least 80% of your psychological problems in trading. So I want to dive into that with you guys. So let's have a look to see who's in the room. Let's have a look. I can't see the chat on my side, so I'm just gonna open up on YouTube. Give me a moment, guys, while I open up the chat, because I do want to see your comments so that I may be able to answer your questions this time. You guys have to have patience of a trader today, because we're live. So there's no cutting, there's no, if I make a mistake, it's live, that's it. Once it's done, it's said and done. I can't go back. Fantastic. So I can see the chat. I'm going to go ahead and just make sure that, fantastic. All right, now I'll go ahead and share my screen. So whilst I bring up my screen, guys, let me know where you are connecting from. Hey, John. Hey, CSUM. Hey, V Legacy. What's up, D? Zeta FX, thanks for coming. Son of God, Angel, it's good to have you guys. So I'm talking to the guys over on YouTube. Anyone on X, I'm not able to see your chat, but if you want to talk to me, if you want to ask me questions, come and join us on YouTube. Make sure you engage, leave a comment. Make sure you like the video as well if I provide you with really good value. All right, where is my screen? Let's do tab, core components of an edge. All right. Just adjust my camera slightly for everyone. Here we go. Okay. Type a 1 in the chat if you can see my screen. Sound all good? Fantastic. Thank you for your patience, everyone. Okay. I actually managed to find the Twitter or the X live chat, so I can see those comments too. Thank you, Andre, for sorting that out for me. Andre's our lovely community manager, making everything work in the back end. So shout out to Andre, appreciate that. All right, so we've got traders all over the world. Beautiful to see you guys. If you're not profitable yet, don't worry, I got you. In this webinar, I'm going to be teaching you what it truly is to have an edge. So just understanding these 6 steps, guys, you're going to be ahead of 99% of traders. You're going to become part of the 1% once you truly understand what it means to have an edge. And that is why I want to show you what these 6 steps are. And in the first step is, do you actually have an edge? That's a question I want to pose to everybody. Do you think you have an edge? Let me know in the chat. Okay. Someone says, I kind of have a trading edge. All right. Kind of have a trading edge. The thing is, with trading, you can't just kind of have a trading edge. And I'm sorry to break that down to you. You need to know clearly what your edge is. It needs to be backed by data. You need to be able to, someone has to look at the data and then say and agree this has an edge. It has a mathematical edge. And there's examples of what that setup looks like. There's examples of what a bad setup looks like. And so I want to help you guys really understand how to define and structure your strategy so that you don't just kind of have an edge. You say, I have an edge and I can prove it to you. Here's my data, Rodrigo. Have a look at it. And with conviction and confidence, you can say, this is my edge. I know when I need to trade. I know when I don't need to trade. So this will help you in really and truly mastering yourself, mastering your psychology, because without a true well-defined edge, it doesn't matter if you're a monk. It doesn't matter if you have the best psychology. If you don't have a trading edge, you're not going to succeed. Okay, so let's talk about that. Let's first, the reason I want to talk about this is because I want to just go straight into the root causes of many of traders' problems. Okay, now, is your edge well defined? Okay, in step 1, is it well defined? So what are the most critical and least critical components that define your context and narrative. Okay? Do you guys understand what I mean by context and narrative? I'm assuming you guys are very experienced traders. Yeah, I'm assuming you know what I'm saying. But if you don't, let me know in the chats. I've got X live and I've got YouTube live chat, so I'm actually I'm able to see both. What are the most critical and least critical components that define the context and narrative? Because you need to be able to, the best traders that I've worked with, they have a very accurate perspective of, and they're able to accurately forecast what the trend is. And the trend can be, it can be scaled. You can understand what the trend is on the higher time frame. You can also understand what the trend is on the lower time frame. So it's all relative to the time scales and the time frames that you trade. But can you actually define that context? Now, some traders, they use the fundamentals to assist them with understanding what that trend is, what the direction is for the day, what the narrative is generally in that particular market or that particular asset that you're trading. So what are the most critical components, and also what are the least critical? This is a very important to understand, because if you're putting too much emphasis on the least critical components of an edge, then that's going to cause you a lot of psychological pressure and it's going to trigger impulsive behavior, right? Let me think of an example of a typical strategy. Let's say you're waiting for a sweep of the previous session. You're waiting for let's say you're trading New York, so you want to see a sweep of London, and then you're looking for some sort of reaction or of a point of interest or a fair value gap, and then you're looking for either a market structure shift, displacement. You're waiting for some sort of a sign or indication that price is going to go the opposite direction or of that London sweep, the previous session sweep. This is an example, okay, of just I want you guys to picture this type of setup. And once you have the actual setup itself, one of the most critical components of that is the London sweep. Is that sweep? Without the sweep, there is no trade, okay? And without the displacement or the market structure shift, some sort of minor resistance being broken, there is no trade. These are the most critical. So what are the least critical? The least critical components may be something like, oh, my price, the time of the day, for example. The least critical might be time of day, or the least critical might be that you have taken 3 losses in a row already that week. And so this particular setup is an A+ setup. It follows all your rules, but you've already taken all your trades that you can take that week. But it is an A+ setup. So that might be a least critical. The fact that it ticks all the boxes, but you've already lost 3 trades that week, you might be reluctant to take that trade. So you're focusing on the least critical component, which is perhaps maybe a limitation on how many risks trades you can take. So this is an example of at least critical. Some people might argue that actually no, that is a critical point. If you've lost 3 trades in a row, that's it, no more trades. Another example of least critical may be that there might be an indicator on the chart. So there might be an A+ setup. It ticks all the boxes, but you're using perhaps maybe volume profile, or you're using EMAs and they haven't quite crossed, or you don't quite have the volume profile at that level. So there might be an indicator that you might put too much emphasis on. So that would then lead you to decide not to take that trade. So this is an example, okay? I see in the comments that a lot of traders trade the liquidity sweep. Yes, that's important. The structure is the narrative. I like that. I like that answer. So, everybody has a different perspective on what narrative and context is, and bias. You need to know what that is for you. Yeah. So there's a question here: how can we trade without being relying on outcome of the trade and being unemotional? So I've actually covered this in the last call. So it would be great if you can watch last week's call, because I covered how to detach from trades. So how to detach from the outcome. But I'll keep your questions until nearer the end, because I'm going to be covering all those questions. All right. But this particular, what these some of these next steps I'm going to be discussing is going to teach you a little bit about how to detach from trades anyway. So stay tuned. Make sure you just keep watching and take notes and write down any questions you have, and I'll answer them later. Okay. Okay. What external factors must be present? Remember, the question is your edge well defined and well structured? So let's understand what external factors must be present. Okay, some of these external factors include high impact news, indicators, volatility, and session time. Okay, understand what are the internal plus the external factors. Ah, Alhamdulillah, bless me. Excuse me. What are the external factors? Now, these external factors will influence the narrative and direction. It will influence your decision for the day. So you have to understand what these are, okay? And what external factors invalidate your trade or session? So for example, you may have a system where you've back tested it and you've realized that during red folder days, or during, let's say, on the day where there's FOMC or NFP, according to back test and forward tests, you don't trade those days, okay? That might be a very hard rule based on an external factor that invalidates your trade or a session, okay? Um, Session time. This is a big one. There are a lot of ICT traders that trade only specific time windows, macros, kill zones, whatever you want to call them. There are very specific times that you take a trade and you exit the trade. Some ICT traders exit trades only at specific times. Um, so this is important to understand what are these external factors, because once you have these external factors in place and they become hard rules and they become critical components of your decision making, that gets added into your trading plan. That gets added into your flow of decision making. Now, this is going to help you in your psychology, because it it makes things subjective. It makes things objective, should I say, and it should allow you to be a little bit subjective too. So what I mean by that is subjective, as in you do want some discretion. You do want that flexibility in trading. You want to be able to adapt. You in trading, and this I want you guys to write this down. You need to trust your subconscious. You need to be able to develop the trust in your subconscious, but you also need to feed your subconscious with the right systems, with the right practices, with consistency in your actions. Uh, in trading and outside of trading. You have to become a person that is disciplined, a person that is consistent. You have to become a consistent person across the board. And the reason why you have to trust your subconscious is because your subconscious it is more powerful than any supercomputer, any quantum computer that's out, any artificial intelligence. Your your subconscious mind is so advanced. And if you're able to tap into the power of your subconscious mind, you will truly have a very powerful mental edge. And but in order, like I said earlier, you need to feed your subconscious mind with the right actions, the right practices, with the right principles and values. And you need to be able to do this with daily habitual actions that are aligned with being a disciplined trader, being a consistent trader, with being someone who handles pressure efficiently and effectively. Okay. I digress there, but I was giving you guys the understanding that when you have these hard rules in place, you then allows you to have more control of your and awareness of your emotions. But if your edge isn't well defined and it's a little bit all over the place, you haven't got insufficient data, then you're going to make emotional decisions. Because if you can't make objective decisions based on critical components, you're going to make emotional decisions because that's what your brain defaults to. Your brain will default to emotion when there is no certainty. When there is uncertainty, you will make an emotional, impulsive decision to survive. Your brain is built to survive, and you don't want to have a survival mindset when you're trading because that leads to the tilt, that leads to this attachment. Okay, fantastic. I can see you guys making notes in the chats. That's right. Yes, subconscious is helping in trading. We must be consistent. I like this. Good stuff. Good stuff. All right. Now let's go to the next point. Is your strategy verified? Is your edge verified? Now be honest, guys. Do you have sufficient backtested data that proves your edge over hundreds of trades under different market conditions? Yeah. Be honest. Okay. Yes, we have a trader that actually has sufficiently backtested data. Respect to you, my friend. And question uh, to uh, ZFX. Have you backtested and collected data also based on different market conditions, such as ranging markets? So these are consolidative markets, trending markets where price is like going one way. It's very there's very small retracements, and price is just very strong in one direction. And if you take fundamentals in mind when you're trading, have you tested under different conditions or sentiment, fundamental sentiment? And this one is quite difficult to achieve because that means when you're doing your back testing, you also need to start reviewing the what the sentiment was at the time based on the current fundamentals. So you need to understand what if you're trading forex, you need to understand monetary policy at the time, central bank policy at the time, interest rate decisions and statements. But if you're trading other assets like indices, if a lot of I know a lot of traders love to trade Nasdaq. So did you have you back tested your trade based on earnings data? Because I know, with the Nasdaq being the top 100 tech companies in the US, they have earning releases, earning reports. How do you how does your strategy perform when there are these high volatility weeks during earnings? Have you tested that effectively? There's so much to consider, right? And seasonal conditions. There's a difference in trading where let's compare right now the current market volatility, compare that to, let's say, December time, compare that to August time. There's difference in seasons. Seasonality is also related to um, different interest rate conditions. So there might be a deflationary environment in the US. So how does your strategy perform when there's deflationary comments or data? Or how does your strategy perform under versus inflationary conditions? And so these are different economic cycles that occur. It's good to have an understanding of these things. If you're using seasonality fundamentals to make decisions in your trading, I just feel like I do believe that fundamentals, it does give you an edge when you understand the fundamentals of the asset that you're trading. If it's or if it's for either forex, indices, or even if it's a particular stock, it's good to understand the fundamentals, what's driving price, apart from just apart from just the charts, apart from the technicals. What are the fundamentals that's also driving price? Because having an understanding of this, it does give you an edge. Okay, and how accurate is your forward tested data and live trading data? What I mean about accuracy, how consistent have you been in ensuring that each trade that you tested is aligned with your trading plan, is aligned with the model that is verified? That's something that the accuracy of data is huge. If you don't have accurate data, and if it's inconsistent, you haven't done all the back testing, you haven't done the journaling, and you're buying challenges and you're failing them because what is the basis of your edge? What is the basis of your strategy apart from memory? You're relying on memory to trade and perform at the highest level, one of the most difficult high performing roles, and you're relying on memory when you're trading against the smartest people in the world. You're trading against the most disciplined people on earth. Traders are likened to, top level athletes in how disciplined they are. And you think you can rely on just your memory and guesswork? Oh, I feel like the direction of the day is this. And yeah, I've seen this loads of times. Yeah, I've got loads of screenshots. And then it's like, oh yeah, look, I've got 500 screenshots of my trade. I'm like, what is this? What do you mean screenshots? You're up against people that have data, hard data on a spreadsheet. They can look at that data and they know very accurately what the probability is of their edge. And you're coming to the table with a bunch of notes and some screenshots. Come on, guys. You want to make you want to make some serious money, but you're not having a serious approach. And I'm speaking to you like this because I'm passionate about what I do. I want you guys to actually, I don't want to just come here and give you some fluff and give you information that's already out there. I want to just be direct and speak to you, connect with you, and help you realize that this isn't a game. This is serious business. And a lot of you are just here treating it like it's a game, and you're treating it like and you're essentially gambling. And I want you to stop gambling because that's having an impact on the people around you, and it's having a very negative impact in in the community. So There's no, we don't gamble here. We do things properly. So that's why I'm having this straight talk with you guys. Okay, step two. Wow, we're we're 30 minutes into the call, halfway through. We're only in step two. That's I really get passionate about these things, and I end up just talking for. I go deep into what I do. But let's go into step two, guys. Do you have the ability to identify your edge? Okay. Now this is coming to you now. It's your capability, your ability, your skill. Can you anticipate a high probability entry model forming? So before the fact, okay? This is very important. You need to be able to have this skill. This is a very important skill. And can you differentiate a strong versus a weak signal forming? This itself requires a lot of practice, guys. A lot of practice to differentiate between a strong and a weak setup, because you can still have a valid setup, but there's degrees of probability. Okay. uh, Back when I was trading, I had three setups. I had one A plus, I had a B and a C setup. A, B, and C. I would, and I can take all three. Okay. I would avoid C and B trades, I would say 90% of the time. And I would focus majority of my time on A plus setups. And so you want to have these degrees of probability, because then it allows you to stay away from lower probability setups. They're still valid, but then can you differentiate between these strong versus weak? Like if you, and I'll give you an example. Let's say you see a very good setup, but it's formed a few minutes before FOMC, and you're trading CFDs. So everyone that trades CFDs, everyone knows that before the news, either the prop firm's not going to let you trade, or they'll ban, or they'll terminate the account, or the spreads and commission is so high that you barely make any returns on that trade. You might even get slipped. There might even be some huge slippage in that trade. So it is a good setup. It's valid, but it goes from an A plus to a C. Even though it ticks a lot of the boxes, it didn't tick the box of, is there a red folder news in the next few minutes? Yes, there's a red folder news. Okay, stay out. Yeah. So you need to understand these degrees of a strong versus weak. And I'm just giving you guys an example. All right. Someone says here that Think Capital allows you to trade the news. Fantastic. What a great prop firm. Okay. Can you effectively identify the risk? Now, this is huge, 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 huge. Without this, then you're really you're really gonna um, erode your profitability over time, because I speak to a lot of traders, and some of their biggest issues is they have a profitable strategy, but somehow their losses are equal to, and sometimes more than, their wins. How does that happen? It happens when there is no consistency in position sizing. It happens when um, risk is increased at the wrong time. It happens when traders try to revenge trade by and over leverage. So then there's these huge uh, there's huge volatility in their P&L. There's like Win, loss, win, loss. There's no win, loss, win, loss, win, loss. It is literally like playing ping pong when you look at the P&L. Fahad says, my enemy is revenge trading. No, your enemy is you. That's your enemy. You need to master yourself, and then you need to become your ally. That's the difference. Revenge trading is just a symptom of a bigger problem, and that problem comes from you. And either that's a lack of skill, a lack of experience, is you don't know what you don't know, or it's a lack of support. You're not able to overcome this problem on your own. Yeah, I'm coming hard on you guys because I really care about you guys. Yeah, so it's all love. Can you identify your edge has eroded due to price signals? So this is important. You can actually have a very high probability setup. Everything's looking good, and you enter the trade, but how price is behaving when your trade is active can erode the probability of that trade. For example, you might have a system or a strategy that when you in the back tested data, you have hundreds of trades that tell you this. In the live trading, it happens most of the time where you enter a trade and very quickly there is a reaction, a response at that level. And either you're going to get stopped out quickly or price is going to move in your favor very quickly. And so when you see price just stalling around your entry and it's not really doing much, that might be a sign that you need to get out. That might start reducing or eroding the probability of your edge at that particular trade. So it might be best to reduce the risk by 50%, or you might want to shift your stop loss by 50%. You're doing the same thing, you're reducing the risk by 50%. And that way you're not at full risk on a trade that is just sitting around break even. Because traders, we thrive on volatility. We want volatility. We don't just want price to just stall. Okay, that's an example. Okay, it's not going to be relevant to everyone's strategy. So in order to identify if your edge has been eroded or the probability of that particular trade has gone down, you need to understand things such as your change of character or market structure shifts or displacements. If you have one of these that are opposed to your particular direction, perhaps maybe that's a sign that you need to get out. Perhaps maybe you need to develop some sort of a trailing stop loss below certain key levels in order to control risk, for one, and also in order to lock in profit if the trade has actually moved in your favor significantly. Time of session, price action, large wicks, draw of liquidity occurs before entry. These are just examples of how you can have an entry that's valid, like the entry model itself, but then something changes in the context of the bias. Something changes in price. Maybe there's unexpected news. Something changes where you'll no longer have an edge. And this is just technical stuff, by the way. You might have something happening you psychologically or mentally that leads to you not being fit to trade that day. You might have poor sleep. You might be unwell. You might have fever, a headache. You might be hungry. You might be fasting like I am for Ramadan. And so like making decisions is quite difficult sometimes when you're hungry. So I'd rather not make that decision when I'm hungry because I probably might not make the right decisions. Yeah. Any Karate Kid fans? Do you remember what Mr. Miyagi said to Daniel-san? I'm not talking about the wax on, wax off. um, I'm talking about decisions. When Mr. Miyagi, he'd always say to Daniel-san, uh, eat first, then we talk. Yeah, we don't make decisions on an empty stomach. Yeah, that was a old school movie. Anyone here, let me know if you're a fan of Karate Kid and Mr. Miyagi back in the day. Shows my age, guys. It shows my age. All right. Can you identify all external variables that erode your edge? Okay. So these are like internal and these are external. So things like broker risk. Okay. These are things like platform risk, prop firm risk. So for example, these are applications, software issues. It could even be hardware issues, but let's say, for example, you're trading with a broker, and then suddenly the platform freezes. Same thing with the platform. Suddenly, there's an issue with Thinkorswim, NinjaTrader, and so on. Right? Prop firm risk. There might be a situation happening in that prop firm that should you really continue trading with that prop firm based on what's happening in that particular prop firm, there might be some issues. And look, if you've been here long enough, you know that this industry is very, very volatile. Okay. And that's why I partner with prop firms like Think Capital, because have they they have their own tech, their own broker. They have a very strong team. So you have to understand what kind of prop firm risks there are if you're going to trade. So there might be a good trade coming up, but you shouldn't be trading that particular prop firm if they're having issues. Okay. Family situations, mental, physical, like I said earlier. You shouldn't be trading if you've just been fired from your job. You've just been fired, you get home, you're really frustrated, you had a very emotional conflict with your boss, and then you shouldn't come home and then want to trade and make money, because let's face it, you're not really going to make good decisions, are you? Yeah, good, good. Someone, P Movie says, I love this session. Yeah, I'm having a great time as well. Really appreciate you guys. Always very engaging with me. What a great community here we have at Think Capital. All right. What are the negative confluences you need to spot in order to reduce risk? Okay. What I mean by a negative confluence is a confluence or a signal that goes against your narrative, your direction. So it's negating the original plan. So what negates what what confluence, what signal negates your original bias? Because then at that point you need to be reducing the risk. Okay. Now, like I said earlier, you can reduce risk by trailing your stop loss, or you can take some partial exits, or just not trade. Yeah, that's also something very, very important. All right, let's talk about step two. Sorry, step three. Let's talk about step three on how understanding your edge is going to eliminate 80% of your psychology. But this one is about understanding the process that prepares you mentally and physically for a trading session. Like this section here, 99% of traders are missing out on. They don't actually have a mental preparation for a session. Mindset and emotional discipline. This is part of having an edge, guys. Okay. And my question to you is, do you actually understand what drives you? What drives you? Be honest. Is it money? Is it financial freedom? Is it time freedom? Is it that you want to be the best prop firm trader in the industry? So is it status? That's my question to everyone that's listening live. And anyone watching the recording, leave leave a comment below. What actually drives you and why? What if I told you that what's driving you could be the cause of your psychological problems? What's driving you, this huge goal, is actually it's causing you to self-sabotage in your trading. Yeah, money and freedom. Time, money, and freedom. I appreciate the honesty here, guys. What is driving you, this time, money, freedom, is actually causing so much self-sabotage in your trading because you are trading to achieve these things. That's the intention. So when your intention is to make money, when your intention is to have freedom, you're not you're no longer trading. You're now trading your desire for time, money, and freedom. And when you do that, you're going to make emotional decisions. Okay? So, and this is a deep topic, and I have to go deeper into this topic in another session, but I want you to think about what actually truly drives you, because there is a better way. Now, my next question is, what factors are distracting your thought process? Is the lack of money or is the desire for more money? Is how does that serve you? How does that distract you? When you lose a trade, when you blow an account, how does that make you feel? When you look at your bank account, and I want you guys to grab your phone, check your bank account right now. I'll do that. I'll look at mine. Oh, I'm not liking what I'm seeing here, guys. I'm only playing. But what reaction do you get? Is it like, oh my God? Is it like frustration? Like, damn, not happy with this. I need more. I need more. I need it now. I need it yesterday. What kind of and how are these thoughts distracting your trading? Yeah. Be very mindful of these things. Do you have a functional or realistic mental framework to apply to your day-to-day activities? Functional and realistic. Does your routine serve you? Does your sleep schedule serve you? Does your diet actually serve your performance in your trading? Does the people you hang around with and spend your time with the most, are they serving you in your journey as a trader? Some very, very deep questions here for you guys. What are your expectations when trading? What are your expectations when trading, and do they serve you? What do you expect to be achieving in trading? What do you expect to achieve at your age? And what do you expect to achieve with your current life situation? How many family dependents do you have? Who do you live with? What financial commitments do you have? How old are you? What expectations do you have of yourself based on these factors? How does those write down these expectations? Maybe even comment in the chat and share what your expectation is. Like by now, I'm this old, I've got this many family members. By now, I expect, or by next year, I expect to be making 10K a month. That's my goal. And I expect nothing less. An example, right? How is that serving you? So that's a very important question. Make a list of all your expectations and write down how they are serving you. If they don't serve you, get rid of expectation. Get rid of this. Doesn't serve you. Eliminating barriers and limiting factors. What routines and habits best serve you? Well, before we get into this, guys, I'm just conscious of the time. Uh, we've got 5 more minutes, but if you want me to continue in the chat, we can continue. Yeah, so far I'm seeing a lot of great interactions with me. But if you guys want me to, if you guys are going to leave in 5 minutes, then we might as well continue another time. Otherwise, if you want me to stay, just comment the word stay, or let's continue, or let's go. Let's see. All right, the consensus is there. Please stay and continue. Let's continue. All right. Okay. Okay. For you guys, I will continue. What routines and habits best serve you? So as a trader, whilst you're building your edge, whilst you're developing yourself, you also need to start back testing day routines, daily habits. You need to test, oh, is it better I go to the gym in the morning, or is it better I go in the evening? Is it better I go to sleep at 9 or go to sleep at 10 or 11? How does that, is it better to have breakfast or skip breakfast and only have lunch and dinner? Is it better to have coffee before my session, 2 hours before my session, or 1 hour before my session? Because if I have too much coffee before my trading session, I get a little bit more anxious. So there's experimentation of routines and habits. And so you need to go through this process in order to understand what serves you and what doesn't. Kashav says hit gym in the morning and trade afternoon and chill evening and sleep night. Like that. Simplicity. Very simple. He knows what he wants. He knows what works. I love it. Yeah. Know what works for you. What habits can you track? Because what you can track and measure, you can control. And if you can control your actions, you can control your emotions. If you control your emotions, you can control your execution in trading. And it begins in your habits. What can you start tracking? Do you have a fitness watch? I recommend every trader needs to have a fitness watch, some sort of a fitness device that connects to your phone with an application, and it shows you your exercise routines. It shows you your heart rate. It shows you how well you sleep. You want to understand and gamify your fitness. Something I encourage everyone to have. I personally like to use Whoop, and I personally like to use Garmin. Those are my two devices I use. But there's some other great ones out there too. What is your reset, review, recalibrate protocol? This is a protocol that I teach my clients. So the RRR protocol. And this is important to do before every trade and before every trading session. You need to be fully reset, detached from the previous trade, the previous session, the previous mistake. You need to review where you're at. You need to review price. You need to review all of the validation and invalidation components of your edge. And you need to recalibrate. So you need to get back into sync with your process. So that it might take a few hours. It might take a few days. You might need to trade demo for a few days to get back into sync. You might need to follow your routine 100% for 3 days before you allow yourself to trade again. I hope you took some notes on what I just said, by the way. I'm giving you guys some really, really good nuggets from what, I'm talking to you guys, and I'm sharing the stuff that my most profitable clients that recently had a 20,000 payout, $20,000 in a month. That's life changing. Clients that within less than 2 weeks got funded $750,000. You can check that out in my Instagram story. I've got so many testimonials of traders that have gone through and understand these concepts and are getting amazing results. So if you want to learn more about what I do, and if you want to learn, I've got an Instagram channel, I've got a YouTube channel as well. Make sure you find me. The YouTube is Funded Trader Coaching, and the Instagram is rodrigo.trader.coach. And you'll see how I talk about all this stuff every single day. And what external factors can you control and limit the impact? Okay, so these are these are eliminating barriers and limiting factors. So what external factors can you actually control, or at least limit the impact? So do you remember when we spoke about external factors? Let's have a look. External factors, external variables: broker risk, platform risk, prop firm risk, family situations, mental and physical. What can you control here? Well, you can control your broker risk because you need to choose a good broker. Yeah. You can control the platforms that you trade. If you trade like a very strange, weird platform no one's really using, well, that's on you, right? Prop firm, same thing. If you don't do thorough research and you go with a prop firm that's giving you 90% discount and is giving you 100% profit, hey, that's a red flag, right? So if you start trading with them, that's on you. Family situations, should you be trading when a family member is in hospital or is unwell? Should you actually be sitting in the hospital with your phone out trying to look for a trade? Yeah. These are things that you can potentially control, right? What are these external factors? I love to see your comments, guys. I'm really glad that you're taking a lot from this session. Fantastic. Make sure that you're taking notes and share your notes in the Think Capital Discord. So the ones that couldn't attend today, they benefit from it. Yeah, it's one of the principles in life is you have to give in order to receive. Yeah, so if you want beneficial knowledge, if you want these kind of things, you have to be able to give to others. So share this video, share your notes, benefit others, even if they're a stranger, because it leads to you receiving more. Very, very powerful principle for you guys. All right, let's talk about step 4. Ability to identify personal risks. Can you identify what triggers your C game? So this is like your impulsive behavior. Can you identify your emotional triggers? Can you identify trade outcomes? So for example, does a trade outcome trigger you into a particular behavior? So if you have, let's say for example, you usually have to wait 1 hour for your trade to play out, but there's a trade that you take that within 5 minutes it hits your TP. So the trade is still the same, the outcome is still the same. The difference is how long it took. So one is usually takes you an hour. This particular trade took 5 minutes. So what happens then? Bang, you get this rush of dopamine. Like, whoa, that was amazing. How did that happen? and then suddenly you're euphoric, suddenly you're excited, suddenly you're like, oh, okay, let's see what's going on here. And then you go from being an intraday trader to a scalper in 5 minutes. You're suddenly changing your entire strategy because you've already hit TP. Oh, I'm up for the day. You start making excuses in your head. Oh, that felt, that was great. Wow, I'm already I'm already up for the day. It only took 5 minutes. Oh, look, I still got another 55 minutes left. I'm gonna I'm gonna keep trading. If I've made money in 5 minutes, wow! Imagine what I can make in the next hour. Let's keep going. Yeah, how many times has that happened to you guys? It's happened to me a lot. I'll tell you that. I've been there many times, so I know what that is. Other people. How are other people triggering you? So, how are friends, family? How is your mentor? How does your mentor, what impact do they have on you? What impact does your trading community have on you? When you go in the community and you see other people trading, you see their ideas, you see them winning, you go on social media, all you see is everyone winning. Like everyone on social media is a profitable trader. It's amazing. It's like, wow, everyone on social media is successful. It's incredible. So the secret to success in trading is to open an Instagram account, and a TikTok, an X account, and just start posting your winning trades. And that's it. You are a successful trader. That's the secret, guys. End of webinar. Just become an influencer. Because no one ever loses, right? So how do other people impact your trading? What behavioral triggers? So your own behaviors. What does your behavior? What does that trigger? What kind of how behavior? Your primary behavior. How does that have an impact on your secondary behavior? So, for example, if you close the trade early due to fear of missing out on the profit, and then the trade goes in, you close it, you're out, you exited at 1 hour. 1 hour later, the trade actually hit 5 hour as you planned it, but you weren't in the trade because you fearfully exited. How does that primary behavior, what secondary behavior does that lead to? Do you then start to revenge trade? So you need to understand how one behavior can trigger another one. Yeah. Tonto Trade says, I joined a trader I respect so much and was blown away by the number of losses. Yet he doesn't show the loss on socials. I became a better trader instantly by that psychology. Okay, interesting. Yeah, there are some mentors out there that they are very good traders. And obviously social media is a tool for marketing. They're not going to always show all their losses, right? But in the community, on the live streams to their paying members, they show the losses. And that's good. You want a mentor that's very transparent. Um, but they're not always transparent, by the way, not all of them. Okay, protocols for effective responses to triggers. Right. Having these, having a risk management plan and a trade management plan are two different things, but are both connected together. These are gonna help you can understand and control your triggers. So any trigger that leads to a poor behavior or negative behavior, that can be fixed if you have these protocols in place. Your reset, review, recalibrate protocol, reporting to a coach. It's so powerful when you have someone that you can message during your session and then they reply to you with feedback. That's so powerful. Or you have a trading buddy. or someone that can actually assist you and actually tell you, you know what, this is not actually a good trade. You sound like you're very emotional right now. It's best you walk away. And then you're like, okay, yeah, you're right. But if you're on your own, sometimes you can't even tell when you're emotional. Sometimes you can't even tell when it's actually, I need to walk away from the charts right now. So that's why it's important to collaborate and have that type of accountability around you. Have a team around you. Build a strong team around you of professional traders. Yeah. Pin the Market says it's through social media we will know ourselves and sort who is good to follow. That's right. I hope you guys are following me on social media. All right, let's go into step number 5. Ability to focus on yourself, on constant self-improvement. The journey of a trader is and the journey in general or for high performance is a constant journey of improvement. It is constant. There's no destination in how good you can become. That's why I love what I do because I'm forced to constantly improve myself. Constantly. There's no sort of, okay, I've reached this level, I'm done. I don't need to work hard anymore. I don't need to follow a routine anymore. I've made it. I think this mindset is destructive, and in fact, it's a default response. So many traders, they finally get that big payout, and then they're like, oh, or even worse, they get the certificate. Yes, finally, I'm a funded trader. Oh, I've made it. And then they stop their routine. They stop following their rules. And then that certificate means nothing. Even your payout, your first payout means nothing. It is okay, it does mean something, but it doesn't in the grand scheme of things. It's like it doesn't mean you can relax. It doesn't mean you need to just think that you don't need to continue working hard. In fact, you need to work harder. You need to keep going. You need to push. You need to really keep improving because when you get your first payout or you're getting funded for the first time, you're at the highest risk of making emotional decisions and you're going to blow everything. Type a 1 in the chat if that's happened to you, where you put you dropped the ball, you dropped your focus because you thought you've made it. You're now, okay, I've got it. That's it. I'm funded. Yes, look, I got a payout. That's it. All I got to do is continue following my rules. I can chill and that's it. Life is good now. And then you start looking at, you go on Amazon, you go on booking a holiday, and you start messaging the family. You're like, hey, mum, let's we can finally go on that holiday. Yeah, how many times has that happened? I'll tell you what, I'm the first one to admit I've done that so many times in my trading career. So I'm giving you guys what not to do. Yeah. Okay. So ability to focus on constant self-improvement means having and developing a growth mindset. That means that you see good losses as business expenses. So these are losses that you followed your rules. Did you actually learn? Do you actually learn from your mistakes? And how much self-compassion, forgiveness, and patience do you have for yourself? This is all part of having a growth mindset. Yeah, Pin says it's happened to me. My first payout was like the market is my ATM. Yeah. I saw I saw a funny meme the other day. where a trader won the trade and then his computer started printing money. I thought that is so accurate. It literally does feel like that when you have a very incredible trade and it's like, yeah, you're making instant money. Um, yeah, trading is funny like that. Makes you feel like, yeah, the market is an ATM. Right. Do you have a functional process of reflection? So many of you guys, like 99% of traders are not reflecting enough. Okay, they're just like going forward and they're not assessing what they've just gone through. They're just trading, 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 trading. They're not journaling. They're just trading, trading, trade. They're just like constantly going forward. They never pause to reflect. And then, or if they do pause and reflect, the reflection process is just unorganized. It's inconsistent. It's insignificant. It's like the the review is, oh, let me look at yesterday's price action. Let me look at my trades. Okay, I'll screenshot those and I'll put them into a folder. Done. No, uh, you have a proper process of reflection is creating a positive feedback loop where you are l- constantly improving and refining your approach so that it's optimized and you are constantly seeking ways to improve yourself. And if you can team up with a coach or a mentor to have a full, complete positive reinforcement loop, then you're constantly going to improve. You're constantly gonna grow and grow and grow and grow instead of being stagnating and not growing, stagnating and then not growing. Yeah. You want to be able to have to grow effectively. And like I said earlier, what you measure and track, you can control. Accurate and effective journaling. This is something that you need to focus and constantly improve on, is ensuring that your data collection is accurate. Uh, Gamification. I get my clients to complete a daily scorecard, a habit tracker. I get them to compete with other sniper traders. So we call each ourselves sniper traders in my community. And so by doing and by having these metrics in place, by gamifying the process through behavioral data and process orientated data and competing with others, you begin to gamify the process. You become obsessed with the process. So this is a very powerful psychological technique. And finally, step 6. Do you have a process for taking action? Can you effectively correct your mistakes? Can you anticipate them? Yeah, are you able to anticipate before you make that mistake? That's so important, guys. And can you identify these mistakes right away? Can you apply the corrective solutions right away? And can you consistently identify areas of improvement? Can you do it whilst not stopping existing work processes? This is quite a difficult thing to do, guys. The step 6 is actually taking action that's effective and taking action that doesn't diminish existing systems and workflows. Being able to constantly improve without stopping a particular system and a process that is already working. And this is one of the cruxes of many traders is that there's something that needs to change in the strategy, but instead of trying to figure out that one thing that needs to change, they change the entire strategy and they go into a different strategy instead of having to instead of trying to figure out the issue. um, that's a very common problem. So how do we actually identify areas to improve? You need to have a very tactical approach to trading. This means having SOPs. For those that don't know, these are standard operating procedures. And having really good routine and habits that you know work for you, and a risk management model that is aligned with your personality and is aligned with your particular strategy. It's backed by data. Like you have an archive of data that you can rely on, that you can use in your trading for your risk management. And you've done extensive reflection and deep work on your beliefs and mindset. And you maintain this through your habits. This is how you're able to constantly identify areas to improve. And remember, when you're making these improvements, change one thing at a time. Don't change too much too soon, because then that leads to over optimizing, or that leads to you just getting rid of a potentially really good strategy. Yeah. But there are times where you've done everything possible. You've changed all the small things and the strategy is still not profitable. Okay, that's when it's a good idea to change. And I find that a lot of successful traders that I've worked with, they've had multiple mentors. They've had multiple different strategies that they've learned. They've taken different courses. And what they've done is they've just gotten a little bit from everybody. Yeah. So these are the 6 steps of how of the core components of an edge. And by working on these, and you'll be armed with know, knowing what truly gives you an edge, but also it would eliminate so many psychological issues that you're having in your trading. So for those who had questions, we'll do questions for the last 8 minutes. I'm glad you thought that was amazing. That was great, actually. I had a really good time today, and that's because of your interactions. So we had some questions earlier on X. Let's have a look. What's more important in trading, a trading edge or an unemotional mind? Thing is, a trading edge, if you paid attention today, you realize that it's not about not having emotions. It's about understanding your emotions and having systems that are going to allow you to know what emotions serve you and allow you to understand what validates an entry model, what invalidates the entry, and understand the risk involved, internal, external risk. How does, as price progresses, how does that increase or decrease the probability of the trade? It's all connected. There isn't one more important than the other. And like I said, 99% of traders don't actually truly have an edge. So it doesn't matter if you have zero emotion, you're like a robot. If you teach a robot a strategy that doesn't have an edge, the robot will not make money, right? Question from PV Movies. My question is, does the trader should have, or does a trader need to have an A, B, and C setup? No, they don't. That was just my example. When I was trading, I had these three criterions. Each trade, each setup was valid, or but you know, one was stronger than the other two. So you don't need three different setups because it does complicate things a little bit. Um, I you're better in the beginning, you're better off just kind of focusing on one or two setups or just one setup. Yeah. Over time, you can add more, but you need to be able to master one setup before you can trade another two or three. Hope that answers that. Can you suggest three books? Yep. I really like the book. Uh, there is Psychology 2.0 by Dr. Brett Steenbarger. He also has another book called Trading Coach, How to Become Your Own Trading Coach. That's a really good one. I really like Market Mind Games by Denise Scholl. That's not really a popular book that, well, it is popular, but it's not very well known in terms of, well, that's kind of a contradicting statement, isn't it? As in, not a lot of influencers talk about this book. Yeah, but in the professional world, yes, this book by Denise Scholl, who is a trading psychologist, and she wrote Trading Mind Games as a fictional story. It's a fictional book based on trading psychology principles. So she tells a story of two traders working together, and they working together and working with a psychologist to master their psychology in their trading. Very good. Like you can actually learn through a story. Such a powerful way of learning, and I thought that was a different type of book. So I would recommend those. There's way more. Another non-trading book that every trader needs to read is Atomic Habits by James Clear. So much of what I do is based on a lot of what James Clear spoke about in his book Atomic Habits. Life-changing book. Life-changing. There's so many life-changing books, but yeah, those are kind of the three books I would say. Please continue making such valuable videos. Yes, I plan to, 100%. I plan to, yeah. All right. Let's see if there's any more questions. Okay, there was a question earlier. How can we trade without relying on the outcome of the trade and being unemotional? So that kind of summarizes the talk. Yeah, that today's presentation and the 6 steps is if you focus on these 6 steps, that leads you focus on the process rather than the outcome. And when you focus on the process, the emotions are easy to control. That's a very quick answer to that question. And as a funded trader, how can I approach a challenge account and a funded trader? Okay, I think the question is how should you approach an evaluation phase versus a funded trader, a funded stage? I think the biggest difference will be in just treating this like a business. Okay, I'll give you an example where if you're a farmer and you produce apples, yeah. Now let's say, for example, you have an organic farm and somehow 80% or 70% of your crop is ruined because of uh, insects and other animals, or 70 to 80% of your crop is unusable because some of it you donate to your community and your family. Okay, so you only can sell around 20% of your crop, but that 20% that you're able to sell it allows you to recover all of your expenses, and it allows you to feed your family, allows you to cover your business for the next 6 months, because 20% of your huge farm, it makes you a lot of money. Plus these are the best apples in the region, the best organic apples. They're delicious, everybody loves them, so you charge top dollar for that. That's not bad, right? That's okay. Okay, you lose most of the time, but it actually, in the end, that 20% produces the profits and the gains that you want. So similar to prop trading, out of 10 accounts, you're only going to pass and get a payout 3 to 2 of them. But those 3 or 2 accounts are going to recover your expenses, cover the investment, and provide you with significant returns. Think about that, guys. Yeah. Be the farmer. Wow. Malu says, this video was a game changer for me. The clear examples and practical tips you provided were exactly what I needed. Thank you for making trading education so accessible. Wow. That's beautiful. I really appreciate that. Really appreciate that feedback. I love to hear that. Really, guys, if you really found value, smash that like button, share the video, share it with your community. Go into Think Capital Discord and say, guys, I just watched the best video from Rodrigo. He's This is what I learned. You better watch it. Yeah, because we need to get this information out there. It's very, very, very powerful stuff. Hara says, this video answered all my questions about support and resistance. The way you simplified it was brilliant. Please keep creating such high value content. Thank you so much. Wow. You've made my day. Honestly, I was getting a bit hungry. I've been fasting all day, but the hunger's gone. I'm filled with joy. I'm filled with a lot of passion and fulfillment. Thank you so much, everyone. Thank you, Think Capital, for allowing me to host another fantastic webinar. And I look forward to more. So if you want to see more of me, remember to share this video on Discord, make some noise, tell the Think Capital community how amazing this call was, and hopefully you see more of me. Okay. On that note, thanks for tuning in. Take care, and good luck with your trading.